Taking a look at Tick Pulse here. This was yesterday, March the 30th. Today's the March the 31st, and we had three trades: long, small profit, short, small profit, long, small profit. And so just kind of a twisty, turny, narrow ranging day. This system we released earlier this month, just a straight up equity curve. 15-second charts. We can only go back. We only have so much data. We don't have as much historical data as we usually do. So September 1st, 2015. Taking a look, average trade profit 73.30, and just at equity peaks. Today we are short on this. Just got short. It's a very quiet day. We've gone from extreme volatility, and now we're only at a 6-point range. Very strange. When the market is this type, is this tight of a range, then you want to consider that the market will go up. The next move will be up. You don't ever know, because it can start selling, and it can run down quite a bit and then reverse and go higher. But if there is no trend and it's this quiet, the trend is probably up. And tomorrow is the jobs report, so that's why it's so quiet today. I don't anticipate a lot will happen. It could sell off into the jobs report between now and 7:30 a.m. Central Time tomorrow. It could do anything really. It could run the highs, run the lows. I don't know, but it's a tight range, and so um, maybe it'll run down and then turn around and run up before it goes down, because a lot of times the market creates some fire sales before it rallies again. And so I anticipate the market, if I had to pick a direction, I would say it would sell between now and the jobs report, and then it'll rally on the jobs report regardless, unless something extreme comes out. But based on previous types of jobs reports, that's what we'll have. So Tick Pulse, highly recommend this strategy along with the portfolios. You can trade this with the portfolio, very low drawdowns. And speaking of which, I'm just biased to the long side just because the volatility is so narrow. And the average trade profit on the long side is 92,000. We have twice as much profit over the last 6 months on the long side. So you could trade long only if you wanted to really focus in and get your average trade profit higher. The average trade profit on the short sides is 52. But if we do roll into a bear market, which I do anticipate happening again at some point, I don't have an exact timing. Between now and May, the market could be bullish, because seasonally the market is bullish between now and May. And so then after May, starting in the summer and into the fall, as the uncertainty of the election approaches, we could have another bear market. But right now, for April and May, if you want to bias it to the long side, that's a risk you can take. A small risk, 3,000 drawdown. So let me know if you have any questions. Tick Pulse, highly recommend this strategy and trading approach to the markets, as it's done well, and it uses the tick in the NYSE tick.